Hello and welcome to our webcast. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's session, Key Elements of a Successful Grant Compliance Program. We're pleased that you've joined us today, and before we begin, I'm going to play our housekeeping video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, we have a couple of great speakers with us today from Moss Adams. We have Hilleary, Senior Manager, and Ariel, Lybarger, Manager. Their bios and contact information are in your webcast console for your convenience. And now I would like to turn the floor over to Ariel to get the presentation started.
Hi, good morning, everyone. Claire, do you want to do a quick introduction?
Sure. Good morning or good afternoon, depending where you're at. So my name is Hilleary. I've been in consulting and advisory services since 2008 and primarily specializing in grant compliance, internal audit, some financial statement audit, and agreed upon procedures, serving lots of tax-exempt organizations, including governments, governmental entities, tribes, not-for-profits, and hospitals. I'll turn it over to you, Ariel.
Great, thanks, Claire. Hi, everyone. My name is Ariel Lybarger. I have also been in and out of consulting and program management, especially focusing on grant compliance and consulting throughout the last about 14 years at this point. I also support a little bit of internal audit and policy and procedure development and implementation. So today we're going to talk with you about, what at a high level grant compliance is and why it's important. We're going to cover some common terms and definitions just so that we're all speaking and hearing the same language. We understand that terms that you use internal to your organization may differ a little bit, so wanted to give us a common ground. We're going to cover common sources of funding and compliance requirements and how your organization can prioritize grant compliance. And at that point, I will pass it over to Claire, where we'll talk a little bit about what a single audit can look like and how you prepare for that, common pitfalls within a single audit and grant compliance, and then we'll go over some questions and, of course, say thank you all for being here and spending some time with us today. The objectives of today's webcast are, and we hope that you get these out of this, is that you understand the basic concepts of grant compliance, those key terms and definitions, and why grant compliance is important for your organization. We would also love for you to be able to identify key elements of a successful grant compliance program and better understand your external audits, and what they'll look like, what those pitfalls are, and how to prevent falling into the trap of a pitfall, and then know some common findings to be mindful of within your organization. Amy, it looks like we have our first polling question.
All right, thank you. So the first polling question is, what is your experience with compliance? And your options are small, just starting my journey, a fair amount, learning every day, experienced, or expert, it's all I do. And the polling questions are located right on the slides that we're presenting. So if you can't see it, just hit the F5 key to refresh your console. And then when you do select your answer, make sure you hit the submit button.
Great, thanks, Amy. Looks like we have quite a few responses coming in about what I would expect, which is, I'm not totally sure, to I know enough to be dangerous, but could probably learn more.
All right, here are the results.
All right. Let's get started and talk a little bit about what is grant compliance at that high level. Compliance requirements are really the fundamentals that are the foundation for everything within a grant program and within an organization receiving grant funds. If you can demonstrate compliance with your funding requirements, you're setting yourself up for success now with any funds you've currently received or any funds that you might be looking for in the future, and continuing to support your communities. Regardless of funding source, having a process in place and spending time to plan your compliance program will just set your organization up for success in the future and continued funding. All right, let's talk a little bit about those common terms and definitions that I said we would go over. We're going to talk a little bit about subawards, which in some organizations may be called a subcontract. That is a grant or a contract that is provided to another entity through a pass-through. So if you've received grant funds and then you're passing those funds out to another organization or entity to execute a portion of the grant purpose and mission, be considered a subrecipient and a subaward. Again, that subaward is characterized by performance measures related to the grant purpose, objectives, and mission. And as a pass-through entity, your responsibility is oversight of those subawards or those subrecipients. A subrecipient or partner, which we hear referred to because really we want to partner with our community, right, is an entity that receives subawards from a pass-through entity to carry out part of that award. So you received funding to go do good things in the community, you're passing that out to another organization to be the boots on the ground. The pass-through entity is the entity that receives the funding from a prime funding source or agency, and then again may pass those funds through. A prime agreement is the agreement between your organization and your funder. Sometimes this will just be the form of a notice of award or NOA, MOU, so that mutual understanding agreement, or an actual prime contract agreement with all of the contractual language and signatures and that kind of good stuff. I'm going to talk a little bit about what types of structures for funding or reimbursement that you might see within a grant, starting with cost reimbursement. This means that you haven't received any funds on the front end of a grant receipt. You're going to be reporting your actual expenditures that have already been incurred during whatever that reporting period is, whether that's monthly or quarterly or whatever. And then you would be reimbursed for those expenses that were previously incurred. Same goes for a subrecipient agreement that is also set up on a cost reimbursement schedule. With that, Organization staff should be reviewing detailed financial reports, whether that's at a line item or category level. Requiring some level of backup is always a best practice, and then approving for payment. A deliverable-based subrecipient agreement means that within that sub-agreement or within your prime agreement, you have contract deliverables that you're responsible for. Those are typically laid out on a pretty consistent timeline. Usually we see quarterly or progress and final deliverables that have both programmatic outcomes and reporting as well as financial reporting included. If you're an organization that is subbing those funds out to go do stuff with a subrecipient, then your staff should be able to review the deliverables, make sure both programmatically and financially they meet their requirements before processing any deliverable-based payment. The other form of subawards or grant awards that we typically see is forward funded. That means that your organization or a subrecipient would receive usually anywhere between 80 and 100% of the funds all the way at the front end of the contract to get them going, to go execute the program. There are still deliverable requirements throughout that contract period or that period of performance where you're submitting programmatic and financial reporting throughout that time that needs to be reviewed and approved to make sure that requirements are being met. And then at the tail end of that, there's usually, if you do the 80 to 90% payment on the front end, there's always a deliverable that's tied to that final payout. Additional types of funding or structures at the front end of a contract that we typically see is an advance payment. This is where a portion of the awarded funds are paid at the front end of the contract. Usually somewhere between 10 and 25% of a contract is an advance payment. And then throughout the program period, that advance would be recouped. These are typically done with cost reimbursable contracts. So I'm going to use really small numbers to keep it simple. If you have $1,000 total award and you're going to give a 10% advance payment, you are giving $100 at the front end. And then let's say you're doing monthly reporting, then that $100 would be recouped throughout that monthly cost reimbursement request, so that in total at the end of the program, you've only paid out $1,000 and not $1,100. The other type of initial payment that happens at the front end of a contract typically is an initial payment. Similar to an advance payment, you get a lump sum of money at the front end so that you can get going on program execution and you're set out on a good foot. The only difference is that you don't end up recouping that initial payment out of subsequent cost reimbursements. And initial payments are usually tied to deliverable-based or forward-funded contracts. So hopefully that gets us all in some similar terms and understanding of what these agreements could look like and be structured as. What common funding sources are out there? You typically see having federal, state, those city or county, those municipal grants, and then private. Grant compliance is more heavily seen in the federal, state, and municipal funds, given that private donations usually don't have those, for lack of a better term, strings attached. So making sure that you have a general understanding of requirements associated with each type of funding source will just help your organization better understand and determine if you want to seek and take on specific grants. Specifically federal, because they come with the strictest requirements. We see those being the ones that everyone's like, ooh, man, do I really want to go that far into it? Additionally, spending time reviewing your specific prime or awarding agreement to identify, document, and understand the specific requirements within that agreement is really critical to your success in executing a grant program. Amy, we've got another polling question.
All right, thank you. So the second polling question is, my organization receives grant funding primarily from, and your options are private donations, city or county programs, state and federal pass-through programs, federal programs, or we're new to this. And while you're responding, just a reminder that if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. And I do see some responses coming in through the Q&A window, so make sure to respond on the actual slide itself so that it can count towards your CPE. All right, here are the results.
So it looks like many of you fall in what I like to consider my sweet spot, which is those state and federal pass-through programs or those federal direct programs. I'm a nerd and I love grant compliance and requirements monitoring, so spend lots of time in that space. Okay, what are those common compliance requirements? If you have a federal award from a federal agency, then it's governed by the Uniform Guidance, which is 2 CFR 200. You'll hear us call it and others call it Uniform Guidance or the CFR, which consists of a total of 12 compliance attributes, some of which you'll see here on the screen. If your program is selected for an external audit, the auditors will most likely test a maximum of 6 of these direct and material attributes. What that means is that they're going to look at 6 of the 12 requirements that are of biggest impact to your organization and to the funding that was received. However, as grantees, you're expected to comply with all of the applicable elements, so those 12 requirements. It may seem overwhelming, but when you break it down and take it one by one, it's a lot more manageable. So I'm going to briefly go over just a couple of these so that hopefully it makes a little bit more sense. Period of performance and contract period can be used interchangeably. The contract period or your award period is going to be the full time in which your contract extends through, while the period of performance is going to be within that time frame. It's saying here is when I'm going to actually do program execution and I'm going to be monitoring and reporting against it. So let's say that your contract period is January through December, but your period of performance might be February to November. During that February to November period of performance, you're expected to do all the good things with the funds that you've received, be monitoring any subrecipients and reporting back on those with your final report, probably due that December. However, that contract period or that period of performance may shift if you've received any no-cost extensions or additional funding, which may extend that period. Eligibility just means that you need to understand your program purpose, what's allowable and unallowable with the requirements that you're anticipated to follow, as well as any specifics for the grant that you've received. And then what's the intended outcome and how do you get there compliantly for that program? And make sure always, when in doubt, ask questions. There's definitely those for sure unallowable items, like when you're talking federal funds, don't go lobby, don't go purchase alcohol or firearms, but there might be some more nuanced stuff for your program where it's, recently I've seen a lot of you can buy PPE for staff, but not for your community to hand out, things like that. With financial and programmatic monitoring, we just need to make sure that you understand the timing, type, and level of detail required for each report required under your agreement. So programmatically, what kind of data do you need to report back on? What format does that need to be done in? And where does that need to be sent to? On the financial side, how are you expected to report back financially how your program is being executed or was executed if at the end, whether that's by line item or category or invoice template, does it need to match back to your budget? All of that. And then subrecipient monitoring for another example, making sure that if you have subrecipient agreements, that you are monitoring them throughout the term of that subrecipient agreement, making sure that they are also doing their programmatic and financial reporting back to you, that your organization is reviewing them for allowability and expected outcomes, and that you don't identify anything in there that might cause concern. And then performing desk reviews or site visits, when warranted, or if the risk level that you've applied to that subrecipient makes sense. So how do you prioritize compliance? There's a lot of aspects to it, right? You want to use a strategy like the one presented on the screen to ensure that your organization is prioritizing grant compliance and set up to be compliant with all the attributes that we discussed in those total 12 that I mentioned. So we're going to go through this at a higher level over the next few slides, including policies and procedures, how you execute and monitor, planning for those subrecipient awards, and then program closeout once a program has been completed. We're going to start with the basis of a good system, which is that financial management and accounting. So making sure that you have a system in place that says, I know how I'm going to get funds in, I know how I'm going to track the funds that I've received, and I have a way to track and monitor the expenses that I'm incurring or the contracts that I'm executing and funds going out the door. So making sure that you have a well-organized chart of accounts for your general ledger, a process in place to ensure that any revenue or expenses or other transactions are being entered into that system correctly, that there is an approval process in place to make sure that nothing slips through the cracks and that everything looks compliant. Making sure that you have a month and year-end close process. So at the end of each month or the end of each year, making sure that all journal entries have been posted, reconciliations performed for those bank accounts or your grant, making sure that what you thought you had spent on a grant is what you spent on the grant, all of that good stuff, and then rolling forward for the next year if you're at year-end. Performing financial reporting and monitoring. So establishing a regular financial report review process throughout the year. Usually that comes into play when you're doing that month-end close and then that year-end close so that you identify any potential issues, errors, budget variances that need to be investigated. And then at the end of that, making sure that you're reporting back through your financial statements and other reporting mechanisms for your organization to your governing body and any funders if they need to see that as well. Another big portion of a well-developed financial management and accounting process and system is making sure that you have a plan in place for budgeting and making sure that you know, again, what revenues are coming in, what you anticipate to come in, and then what you anticipate spending funds on, whether that's procurements, subrecipient agreements, hiring more personnel, things of that nature. And then all of this culminates into making sure that you have well-presented financial statements, that you're tracking and monitoring everything, not just for your funder, but also that external audit that you may be subject to. The meat of why we're all here, right, grant compliance, is going to be grant management. So you need to have a well-documented policy and procedure in place that helps guide your organization all the way from applying funds through reporting and closing out of funds, right? So making sure that you have a process in place to say, these are the types of funds our organization wants to go after and how we're going to do that, who's responsible for identifying opportunities, applying for it, reviewing those applications, and then accepting them. The pre-award phase, making sure that someone's reviewing that notice of award or prime agreement prior to entering it, and that that person reviewing has authority to sign into those contracts. And then once you get into the actual execution of a program, that post-award phase, making sure that you have a process in place to establish the grant within your accounting system, defining roles and responsibilities within a program execution or a program team, and the flip side of that, the finance team that needs to be involved with helping you monitor the use of funds, making sure that you understand the requirements, timelines, all of that when receiving awards. Then getting into the monitoring and reporting, which is really, I feel like, the cornerstone to compliance, which means that you understand the requirements that are placed on you and any subrecipients that you may be entering into agreements with, ensuring that you have those dates are identified, you have reminders for those dates, what reports need to be done and what those reports need to contain, all of that. And then just at a high level, most funding sources, like I mentioned, regardless if it's federal or not, tend to defer to the uniform guidance or the CFR. However, you need to make sure that you really read your prime agreement and understand what requirements are being placed on your organization and tracking those accordingly. Subrecipient monitoring. This is the area where we see most organizations struggle because it is a heavy lift to say, not only do I have to monitor my use of the funds, but now I have to go do all of the same stuff and make sure that a subrecipient is administering funds compliantly. So within a subrecipient monitoring policy, we expect to see an application section. So if you're going to put out a solicitation saying, hey, we have these grant funds, community, please come apply for them. How are you going to do that? How are you going to review those applications and give them a risk rating to make sure that the applicants that you're providing funds to are, good organizations to do it. And then establishing a process for monitoring subrecipient budgets and expenditures throughout the program period, whether that's monthly, quarterly, annually, depending on the structure and the length of the program that you're executing. And then tying right into that, developing procedures for executing that monitoring throughout the program period. So what kind of reporting are they going to do back to you, programmatic and financially? Are you going to do desk reviews or audits on those subrecipients? And if so, when are you going to do those? And then site visits if applicable to your grant fund, where you actually go out to their site, and sometimes that's measuring doorways to make sure they're ADA compliant or that they have specific signs posted within a facility. And again, all of this is typically derived from the CFR. Subrecipient reporting is very defined there, but your funding agency might be placing other requirements on you. So make sure you read your prime agreement to understand that, if so. The last policy and procedure that I'm going to cover as part of this, while there are many, many others out there, is procurement. That's another space where it becomes really important to make sure you have well-developed and documented processes in place, everything from purchase request and threshold. So when can I go purchase something on a company credit card versus when do I need to go out for a proposal and bid? What does that threshold look like for your organization? And does it comply? Let's say you have direct federal dollars. Is it complying with the federal threshold for micro, small, and large purchases? So having that documented, also documenting who's allowed to enter into what kind of agreements and at what dollar thresholds approvals are required. Purchasing exceptions, if your organization is going to you need to bypass your typical purchasing requirements. We see that within sole source procurements. So when there's not another vendor or provider out there to get you what you need, or emergency purchases. We all just lived through COVID. So a lot of emergency purchases in there where it's like, I needed this yesterday and we'll get the documentation later. And making sure those are all well documented so that you have support if needed. Then the receiving process. So who's responsible for receiving goods and services? And ensuring proper segregation of duties between the person making the purchase and the person receiving those goods or services. You want to make sure that I can't go out and buy something personally and then also receive it personally and bypass my accounts payable or my disbursements process. Vendor management is always the best practice to make sure that you have someone who's responsible for that initial vendor setup, making sure that you get all the right documentation. And then once a vendor is there and you've been engaging with them, doing a periodic review of those vendors to make sure they're still vendors that you're working with, and that all of the updated information is retained and on file. And doing that annually is typically what we see as a best practice. Additionally, if you live in the state of California or you operate out of the state of California, the AB5 verification is a new law and requirement that you need to be mindful of that tells you you need to identify, go through a a review process to identify if it's a contractor or a potential employment relationship. Again, tracking and monitoring the use of those grant funds through procurements. So making sure that whatever you're purchasing with those funds, whether it's goods or services, is allowable per your agreement, and that you're tracking what funds you're using to pay for that. And then again, getting down to the derived requirements through the CFR. So we've talked a lot about you need to have these good processes in place. You need to have them documented, but how do you implement any of that? Making sure that you document those defined roles and responsibilities by position and department, not just at a policy level, but at the task level, where this is how I'm actually going to move through a procurement process. This is how we're actually going to execute subrecipient monitoring. Making sure that your personnel are trained on your internal policies, high level, so those financial policies, your general procurement process, things of that nature, but also on grant management and subrecipient monitoring. So understanding how your organization handles grants and monitors it and monitors subrecipients, and then diving down deeper into that when you have a specific program, making sure that the personnel working on that program understands the requirements that are being applied and how they're going to execute the program. Tying right back into that and all the allowability of all of it is tracking funds, making sure that you know how you're going to allocate and monitor allocations of things like your indirect costs, so those personnel costs that can't be directly attributed to one program. We usually see that at the executive level. Your rent or your facilities costs, things like that, making sure that you understand how all of those are flowing back to your grant and that allocation methodology is documented. Executing and monitoring, we've talked about this a lot, right? Make sure that you understand the reporting, how you're going to report, when you're going to report, and what needs to be maintained as part of that reporting. Developing a system to track and monitor your programmatic outcomes and deliverables, but also the financial side, whether that's in an accounting system or you need help developing something outside that system within Excel. Making sure that you are monitoring budget to actual progress and the burn rate down of your funds. So making sure that you're going to be able to spend down your full award by the end of the performance period or the contract period. Retaining all support for your expenditures, so everything like purchase orders, timesheets, and pay stubs, subrecipient agreements, and any monitoring performed. Typically, that retention period for all of that support is about 3 years, which ties back to the federal requirements. But I've seen recently, I've seen a lot of 5 and 7 years as well. And then again, monitor, monitor, monitor. Know how you're spending funds. Develop a compliance monitoring program to monitor your internal spending and use of funds, but also those subrecipients or subcontractors when you're engaged in that way. Planning for those subrecipient awards. So again, like we talked about in the policy and procedure section, plan for how you'll monitor those subrecipients during the life of your grant and their grant. Understand the compliance requirements that those subrecipients need to be adhering to, because it is your responsibility as the administrative organization to make sure that they're using the funds allowably also. And then that monitoring process. How do you get applications? How do you award them? How do you do a pre-award risk assessment, which is a requirement of federal funding? Doing the suspension and debarment checks, if applicable, specifically with federal funding. Making sure that minimum insurance requirements and verifications are done if that is, if there's heightened insurance requirements associated with the funding. That you have a subrecipient agreement template in place that outlines the reporting periods, the reporting requirements, and any other applicable requirements that you're going to place on them, and then a plan in place for desk reviews and audits as necessary. So how do you plan for program closeout? You've done lots and lots and lots and lots of things. throughout the program period. So you just need to make sure that you are completing the reporting timely, that you ensure all final payments and subrecipient agreements have been made and closed out, perform your final reconciliation, so making sure that you know where your funds went, that it ties to the award, that you didn't lose track of some funding somewhere, and that you have a process in place for retaining all programmatic and financial documentation. And then finally, tie it up with a bow. You have a final report due to your funder that rolls up your use of the funds and any subrecipient or subcontractor use of the funds as well. So I just said a lot of words. I'm going to pass it back to Amy for another polling question.
All right, thank you. The third polling question is, my organization has defined policies, procedures, and systems in place to ensure compliance with our funding sources. And your options are yes, no, or we're still figuring it out. And then also you do have the option to submit questions for the presenters in the Q&A window. I know many of you have already been submitting your questions. We have quite a bit of content to cover today, so if we don't have time to respond during the webcast, we'll do our best to follow up with you. All right, here are the results.
I love to see that so many of you have defined policies and procedures in place. Can't tell you how many times we go into a client's organization and there isn't any, or they haven't been touched in 20, 30, 40 years, which can cause some trouble. So now I think I am passing it off to Claire to talk with you about single audit.
Perfect. Thank you so much. Yeah, so the next slides we'll cover is kind of what to anticipate for your single audit and how you can prepare, as well as just talk about some of the common findings that I've seen in my experience as an external auditor to help inform you of maybe what to look out for. So, each single audit is going to be a little bit different. It's really important that you discuss with your auditor kind of what to expect, what should occur, and the specific duties of the auditor. All of this likely will be outlined in your engagement letter, but there are certain factors that influence what occurs during the audit include the complexity of your organization and the availability and completeness of the documentation that supports your financial statements, your internal controls, and your programmatic activities and expenditures. But generally speaking, auditors are going to perform these 7 steps. First, they're going to determine if your organization's financial statements are fairly presented. They're going to look at your CFA and determine its completeness, its accuracy, and also assess if it's fairly presented in relation to your financial statements. They're going to look at your internal controls. Internal controls is is a very large component of a audit, and so they do spend quite a bit of time making those assessments. And they're going to determine if your federal regulations and terms and conditions of the award were followed. And then items 5, 6, and 7, following up on prior year audit findings, obtaining evidence to form and support opinions on the financial statements and program compliance, and then an internal control report. These are all areas where, the meat of the audit happens. I will speak a little bit later about the prior year audit findings. I think this is just an area of emphasis that I see that's often overlooked. But in speaking to items 6 and 7, I just thought one interesting thing to highlight that I think a lot of folks are just unaware of is that auditors, they provide an opinion on only the material accuracy of your financial statements and the compliance aspects of your federal programs. They do not provide an opinion on your internal controls. If they identify anything that they see of concern, they will note that as an issue and report that as a finding, but they do not provide or opine on your internal control structure. So just something to be mindful of and kind of what to expect in terms of those letters or the reports that you would see in your financial package. So I think this is a really good list of how you can be prepared for your audit. So firstly, gather and summarize all your federal grant information. So this is going to include the things like grant awards, your assistance listing numbers or CFDA numbers. You might hear me use that term interchangeably during this. It was CFDA for quite a long time, and now it's an ALN number. The total receipts and expenditures of your awards, and then any of the pass-through entity name or grantor information if that's applicable to you. The second is preparing your financial statements. So, be sure that you're closely looking at your statements and ensuring they're accurate and complete and contain all elements. I think, end of year statements, there's a lot more things that have to be assessed that you typically don't do throughout the year. Some of the things like, accruals for certain liabilities, if you have any outstanding lawsuits that potentially would need disclosure or may need to record a liability. Those are elements that I see that are often missed, and you want to make sure you capture those before your external auditor gets a hold of your information. And then keeping in mind that the notes will also be needed for your financial statements, that, ultimately it's your responsibility to prepare a lot of those schedules and understand how they're calculated and interrelated and tied to your main financial statements. You'll need to prepare a detailed CFA. It's the Schedule of Expenditures of Federal Awards. The CFA has specific elements that have to be included, the total federal awards amounts and listing all the different federal programs, first by agency, and the ALN number or CFDA number, the name of the pass-through, and so forth. Then moving on to number 4, so I think Ariel, she hit home that policies and procedures, while maybe not very sexy, are very, very important, and I think is also another area that we see that is often overlooked, particularly with COVID, and some of these new funding sources. There's been some nuance that has been introduced to some of the policy requirements that maybe have not been contemplated or addressed for some of our clients. And so these are definitely areas that I think are of particular attention to your external auditors. So just get ahead of that, making sure you're looking at those. They're living documents. You really want to be sure that there's some sort of standard review process that's happening on a periodic basis to look at those. Item 5, so providing your auditor with access. We're seeing a lot of accounting systems that allow functionalities that would provide view access to your auditors. And so this is just a consideration for you to kind of help alleviate or reduce the burden on your staff, that if your externals can have access to your system to be able to look at specific records, it might reduce some of that stress for your team. And then once again, we'll talk about this, but reviewing prior single audit findings. I think there is, you're going through the audit and you think you're finished, but there might be some findings, but you're just so exhausted from maybe having to produce all those documents and whatnot that this gets put on the back burner until a year comes by so quickly, and those single audit findings maybe not were addressed. So once again, being proactive, making sure those things are looked at regularly and seeing if they're being remediated is important. And with that, the preparing of the schedule of prior audit findings, this is always a component of a audit package. If you do have prior audit findings, that there has to be some sort of a narrative that speaks to the status. And then lastly, once again, reviewing and updating those internal controls. You want to be sure you're fully aware of what your internal controls are so you can best articulate those with your external auditors if they're not memorialized in your policies and procedures. Okay, so common pitfalls seen in single audit. Some of these categories hopefully will look familiar to you. These are some of the compliance attributes that Ariel was speaking about earlier. And so I'll just drop into a few of these and kind of explain what I've seen and what you can look out for. All right, so with reporting, we have three kind of categories here: inaccurate reports, unsupported report data, or late reports. So the biggest one that I've seen in reporting is the time and effort reporting. So you have to ensure if you have salary costs that are being applied to your award, you need to make sure that it's the actual time spent by the employee on the activities of that federal program. So as an example, say you hire someone and you anticipate they're going to work in two different programs, and so you allocate their salary costs as 50-50 between these two. But then the year goes on and they ultimately end up spending 80% of their time in one program and 20% in the other. But you don't do a time study or something to kind of update that the costs being allocated then are inaccurate. And we'll talk about this also in allowable costs. I've seen it as a finding under both reporting or as allowable cost issue. So something to consider. Also making sure that the time charged does not exceed 100%. So if you are doing those allocations, it has to add up to 100%. Just something to be mindful of. Unsupported report data, so point-in-time systems. This might not be relevant to some of you, but I know in my history I did a lot of work on hospitals, tribal hospitals that would use RPMS system, which is an older system and was somewhat difficult in the sense that, say you were a 9/30 year end, you ran a report on that date, but maybe you didn't save it. If you were to query that same report on a later date, you would get a different result. And so ultimately, you want to make sure that you can have that, you save the report or whatever you're using to substantiate the information that you're using. And if, there might be other systems that are very similar to this, but it's something that I've come across. And then, of course, late reports, I don't think I need to really speak to that. Just making sure you're getting things in on time will always be best practice. So matching level of effort and earmarking, we have inaccurate records, inaccurate calculations, and then supplement, not supplant. So for in-kind and volunteer hours, you want to make sure that you're reviewing those. We've seen instances where maybe that's just something that, it's an end-of-year activity that kind of gets lost in those end-of-year pieces. So be sure that you're looking at those and reviewing those. Regarding inaccurate calculations, I think currency conversion may not be applicable to some of you, but if you do have any sort of foreign currency, making sure those conversions are completed. And then, of course, if you're using any Excel files as like a tool to complete your matching, just double checking that the logic embedded within your Excel or whatever you're using to do those calculations is accurate. It's kind of the garbage in, garbage out, that you just got to check all the things before you start relying on it. And then anyone that has education programs, Title I, it prohibits the supplanting of non-federal funds. And so, it's designed to ensure that federal funding supplemented rather than supplanted or kind of replaced the state and local funds that were used to support services and activities funded under those programs. So just be mindful of that. Okay, so subrecipient monitoring, I think this is something that's near and dear to both Ariel and my hearts. And I spoke to this earlier. You'll see on the slide the CFDAs and DUNS. These actually both need to be updated. So CFDAs are now referred to as assistance listing numbers. So making sure that those are communicated to subs. And then in 2022, the DUNS number actually went away. These were used for such a long period of time, I'm still having an adjustment period, but they're now called the UEI, which is the Unique Entity Identifier, and that will be the number that's used across the federal government. And it's very similar to the DUNS. The difference was the DUNS, I believe, was an 8 number, and the UEI is a 12-character alphanumeric. So you want to make sure that the verification is completed, that the subs have a UEI to make sure that they're registered with the sam.gov website. And then Ariel spoke to the last 2 bullet points here about the risk assessments and the monitoring. Ultimately, your auditors are going to be looking at your process to say, are you monitoring your subs based on the assessed level of risk and your policies that were developed to inform what that risk level should be? And so, if you have a sub that is doing everything's great and reporting no concerns, you would expect a low risk assessment. And then the monitoring would also be a lot lower and oversight would be lower in those cases. But if you're having issues with a sub, maybe they're just inexperienced, they've been late on reporting, etc., there's definitely going to be more oversight expectations in those cases. Eligibility, I think these are pretty straightforward, just inaccurate determination. Definitely, if you receive an award that has an eligibility component, making sure that you're developing processes in place to have that information gathered at the front end, and then also with regard to the record retention, documenting that and saving it. We've seen this where maybe if there's a program for, say, income eligibility, it was done once, and then this person is a recurring participant of the program, but that verification was only done at the very beginning several years ago, and now it's not retained, that information wasn't retained. That's likely going to be a finding. So you want to make sure that if you do have a program that has participants that have ongoing participation in the program, that there are regular intervals where the records are updated and retained so that you have that information for your auditors. Allowable costs, so this is a kind of an all-encompassing one, and honestly most federal awards in terms of what applicable compliance requirements you're going to have, this is always going to be one likely that will be tested. And so we talked a little bit in the reporting about the payroll allocations. That's that first bullet point about based on an estimate rather than an actual. It has to be based on actuals. So be mindful of that. That's definitely one very, very common. And then the last 2 bullet points are very simple. I think that this is where I was seeing most of them. Is just bottom line, the cost was not allowable under the award. That a lot of the grant awards are going to have very specific criteria of what is allowed to be spent, and so you really need to be reviewing that. And then costs not properly supported, so receipts, seeing a lot of, if they're like online purchases that were done by someone else and that person left and their email wasn't retained, or things like that, just some considerations that you really need to manage as part of your internal controls. Indirect costs, so just including unallowable costs. That unallowable costs, I think they're pretty commonly known. Things like advertising, alcoholic beverages, donations, fines and penalties. Those are things that are just unallowable and should not be included. And then also, of course, if your indirect rate was misapplied, your external auditors will be looking at the calculation of your IDC and just assessing its reasonableness. And then procurement, I think this is another big area, and Ariel really hit home about the policy pieces. Once again, your policies are living documents. They should be front and center with your team, especially those that are responsible for procurement. They need to understand the various levels and what's required. And then ultimately they need to be enforced, that if you're not following it, then what's the purpose of it? So that's a big piece of it. And then as far as the organization cannot prove that a vendor was checked for suspension and debarment, I think I saw a question in the Q&A. They're asking, do we have to check every vendor that we use federal funds for? And the answer would be yes. And best practice, what I've seen is if you can do like a screenshot or something and retain that in the vendor file to evidence that they were checked at the time of, that initial usage, like that's going to be best practice. And then this is just kind of, I'm maybe hitting home on this a lot, but I see this so often where it's just not front of mind. If you have a finding, stay on top of it. The year goes by so quickly. You need to check on the status. You need to look at what you said you would do and what you've actually done. Look at those targeted completion dates. If it's been remediation has been implemented, great. But if not, develop a plan, develop a memo, write up what you think you're going to do, those revised dates, the revised people that are going to be responsible for it, and have that ready for your external auditors. So when they come asking, you can show you've tried to do your due diligence in having the finding go away, because you don't want to have a follow-up finding that just gets repeated year after year after year. And then lastly, of course, following up with your board or your audit committee. They want to be informed about what's going on, so it's always better to be in front of them and get these things in their ear before they're hearing it from your external auditors. Okay, last question, Amy.
All right, thank you. So the fourth polling question is, do you now have a better understanding of compliance so you can apply the information to your role in grant administration? And your options are yes, no, or maybe I need more information. And for those of you that would like a copy of today's slides, you can download them now from the folder that says slide deck and handouts. And then we're also sending them out via email tomorrow, along with a recording of this webcast. All right, we'll do a few more seconds here. Here are the results.
All right, perfect. Well, I see we have maybe a couple minutes. So I think I answered the one question with regard to the suspension and debarment. Looking through questions. Let's see. There was one. How do you know the difference between a subcontractor and a subrecipient? That's dependent on the nature of the relationship. Generally, a subrecipient has more autonomy. They're responsible for ensuring the oversight of the program, whereas a contractor is really just kind of reporting back to an organization about an established, contractor agreement or, event that they're going to be completing, but ultimately the decisions are not held at their level. That would be a contractor type relationship. Ariel, are you seeing any questions here? Let's see. I'm thinking we're going to run out of time to.
Yeah, I think there's a lot of really good questions in here that I would love to follow up on and be able to spend a little bit more time giving you all thoughtful answers. One easy one is if we can explain more about a time study. A time study is a retroactive or a look back at the time that was spent, whether that's a year or a quarter in your organization, and identifying how was the time actually spent, how was it allocated to a grant throughout or multiple grants throughout your organization, and does it align with what you budgeted for and what was approved for by your funder, or did you over allocate and potentially over overcharge a funder, similar to doing like an indirect cost look back and verification.
Yeah, perfect. Well, I think those are all the questions that we'll have time for today, but we'll try to do our best to follow up via email. And then before you go, here's some items. Amy, do you have any closing?
I do, yes. So thank you, Claire and Ariel, for a really great presentation today. I do wish we had more time. But to our audience, if you have further questions or comments, please reach out to us, and we would be happy to continue this conversation. You can drop a note in the Q&A window or reach out to Claire and Ariel directly. Their contact information is in your console. And if you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 2 weeks if you have difficulty downloading it now. And finally, here is a link to a survey for today's presentation. Your feedback is appreciated so we can make the most out of our time with us. Thank you for joining us, and take care, everyone. Have a great day.